Alright, good day everyone. This is CapitaLand Integrated Commercial Trust. First half 2024 financial results dated 13 August 2024. Right, so we look at the key highlights. MPI is up 5.4% year on year. Total borrowing on fixed interest rates at 76%. So only 24% may benefit from the drop in interest rate from the Fed. Alright, recently. Average cost of debt is 3.5%. Alright, this is a slight concern because they are actually issuing debt at a higher interest rate. So they issued $300 million 10-year fixed rate green notes at 3.75%. Right, so this is higher than their average. Okay, as well as the fact that they are trying to renegotiate some debt at this point. Right, 80% of them expiring in second half 2024 have been refinanced or in loan documentation stage. That means in the final stages of negotiation. I don't expect them to have problem refinancing, just that how much will it affect this 3.5%, right? So how high will this 3.5% go after renegotiations? Right, occupancy is as always very strong, not worried about this. Okay, rental and office portfolio, retail and office portfolio rental revisions are both healthy at 9.3% and 15%, right? Clarke Quay has been officially relaunched on 26 April 2024, right? And there's some enhancement done at 101 Miller Street, completed on 10 July 2024. Right, so IMM building, phase 1 and 2 of AEI at level 1 is in progress and on track to meet ROI target of 8%. Healthy leasing interest with committed occupancy at 98.7% for phase 1 and phase 2 AEI, right, including leases under advanced negotiations. So we don't have to worry that IMM has high vacancy, right? Clearly there's a lot of interest. Right, new tenants are expected to start operation on fourth quarter 2024, as well as a new food court on level 3, also targeted to open in the same period, fourth quarter 2024. Right, so this day and night idea at Clarke Quay is launched on 26 April 2024. Right, hopefully this will bring in good revenue for the businesses there. Right, anyone knows how successful this is, do let me know. Right, I don't really visit this place, so I cannot say I know what's going on there. Galileo at Frankfurt is undergoing AEI. Alright, so works are well underway and on track with target phase handover to European Central Bank from second half 2025, which is a year away. Right, and there's an occupancy of 96.7% with the commitment of City of Frankfurt. Okay, at North Sydney, right, we talked about 101 Miller Street. There's an AEI done at the ground lobby. Right, it seems to be well received by tenants. Right, and 100 Arthur Street, there's new fitted out office spaces launched to meet the latest market demands. All right, and proactive leasing in progress for units available to improve occupancy. All right, again, I'm not super interested in their overseas properties because not too big and not the most important thing in the REIT, in my opinion. All right, you look at the positive for the REIT, right? Gross revenue growth, right, is at 2.2%, right? So that's decent, right? This despite the fact that Galileo is not contributing. Operating expenses is down 5.8%. All right, this is quite a good thing. All right, and you can see that distributable income is up 3.7%, mainly due to these two things. All right, revenue growth as well as operational expense savings, right, more than compensated for their higher expense in finances. Right, so this is something positive that not many REITs can boast of. All right, so have to give CICT a pat on the back for this. Right, so we'll just go straight to DPU. Right, if we compare first half last year to first half this year, right, DPU has gone from 5.3 cents to 5.43 cents. Right, so that's a decent improvement. Okay, despite the fact that there's an enlarged unit base. Right, not going to go through that. Right, so the second quarter 2024 financials, okay, NPI is up 4.6%. Right, generally is still positive. All right, so gross revenue is up 1.8%, NPI is up 4.6%. Right, this is for second quarter year-on-year performance. All right, so first half 2024. All right, I think we've talked about it somewhat. Right, 2.2% year-on-year improvement, 5.4% year-on-year improvement for MPI. Right, the NAV for this stock is $2.07. Right, so it's currently trading at $2.15, right, which I think is slightly overvalued, right. I did an estimate for how much year this REIT is giving out based on $2.15, right, and based on 5.43 cents annualized is something like 5.05% dividend yield, all right, which to me is a bit on the low side, although this is quite a strong REIT, all right. Yeah, so this is the amount of debt that they seem to have to refinance, right, which is, I think, quite a lot, all right. So I'm not sure how this will impact their uh, interest costs, as mentioned earlier. Okay, I won't talk too much about the rest, except that I'm not sure that moving forward there's so much space for upward rental revision, right? Although, yeah, both downtown malls and suburban malls have been doing well, right? You can see the rental revisions are good, right? But if you look at the shopper sales, right, first half tenant sales, right, it looks like quite flattish, right? So the fact that suburban malls is still strong, 1.8%, I think it's still decent, all right? But downtown malls is down 0.9%, right? So the fact that the sales are not moving has me a bit concerned about how much they can revise rental moving forward, all right? How much they can revise rentals upwards moving forward. Right. So with that, I would say that I think at $2.15 is slightly overvalued. All right, but I won't sell until slightly higher. All right. With that, I think I'll end the presentation. All right. Again, this is not financial advice. Please do your own due diligence, as I may make mistakes. All right. That's all. Thank you for listening.